Joining me now is White House National Economic Council Director Kevin Hassett. Kevin, great to see you. Thank you so much for joining us on all of these issues. This deal that the president announced yesterday marks a major step in the administration's push to lower drug costs. What is your reaction? Right. And do you believe this is paving the way for broader reform across healthcare and lower prices across healthcare?
Absolutely. It's part of the president's all-of-the-above strategy to address affordability for Americans. You know, I think even to take one step back, if you look at what happened to the real ability, the real spending power of people under the Biden administration, it went down by about $3,500. And so their dollars bought way less by the end of the Biden administration because of his inflation. We're on pace to have the affordability, the value of the dollar go up by $1,200 this year, but we still have room to go. And we can do that with macro policy, where, for example, we're cutting the deficit this year by perhaps as much as $600 billion, which will put downward pressure on inflation, but then on a case-by-case basis. So we're going after drugs. So this is just the first of many big price cuts for drugs that we're going to see. We're going after gasoline. It's down 20 cents a gallon. We're going after beef. We've got a big policy that we're going to be announcing soon. You remember eggs, Maria, or eggs now, the price is down from what it was last year. And so we're doing a bottom-up and a top-down approach to address affordability. We're making a lot of progress in a lot of ways, but we understand why people are still a little bit frustrated because they lost so much ground under Joe Biden.
Well, I mean, they lost ground under Joe Biden, and I know that Sean Duffy walked into a disaster with air traffic, but look where we are. It is day 38 of the government shutdown, the longest in U.S. history. It is severely impacting travel, and you know, there's a lot of ripple effects there. Today, the FAA cutting flights at 40 major airports across the country, going to 10% of cutbacks in air traffic. Meanwhile, the Senate is aiming for this test vote today on a new interim spending bill to end the stalemate, plus 3 individual spending bills. This bill would include a new end date of sometime in January rather than November 21st, which, of course, was included in the House-passed measure. Do you have any expectation that this will pass today in the Senate? And what is your expectation of the impact on the economy of this shutdown?
Right. Well, first, the impact on the economy is far worse than we expected because it's gone on for so long. And so there are now like Goldman estimates that it's over 1% or 1.5% of GDP. I think we were thinking that we're going to have at least 3% growth in the fourth quarter. I think now we're expecting something like half that because of the harm by the Democrats' policy. And so, you know, I think that they need to stop. They're harming Americans. They're making it so that people are worried about their holiday flights. You know, the folks, the government workers who are 750,000 of them aren't getting their paychecks, are starting to wonder whether they should find another job. And I think the long-run harm to efficient government from this is something that really is probably being underappreciated by the Democrats. Because the point is, if you're a person who's deciding right now, you're just out of college, should I take a job in government or should I take a job in the private sector? Do you want all this? Do you want to come and have to work for months and not get paid? You know, I really worry about what's going to happen to the government workforce because of these regular shutdowns. This is the third one the Democrats have given us since President Trump was in office. Third one.
I know. I mean, so you're saying that as a result of this, that you'll see a more severe cutback in jobs for government jobs? I wonder who's going to want those jobs if we don't get this thing solved quickly. Because, as you see with the air traffic controllers, they work incredibly tireless hours. It's a really hard, stressful job. And they've been doing it now for more than a month and not getting paid. And I can say that there are people like that all over the government, real patriots that are government workers who are seeing their lives turned upside down by the Democrats. And for what? Because they get a little bigger victory last week or this week? I'm not really sure that the Democrats know what they're doing. But the one thing I can say is that we sort of came in with 2 theories of what the Democrats were up to. One was they're going to wait until after the election, and the other is they're going to wait until Republicans are forced to go after the filibuster. And if they don't move soon, then I think we have to conclude that their play is to just cause so much harm to Americans for so long that eventually the Republicans really have to put the filibuster on the table. Well, I mean, look, don't you worry that that's going to come back to bite you? I mean, the Democrats will be in charge at some point again, and then they'll just move forward and plow forward with whatever legislation they want without getting Republicans' input.
if you do get rid of the filibuster.
That's why Republicans don't. That's why Republicans don't want to do it. And again, you know, Barack Obama promised that he's going to be adding states and so on. And so, yeah, I think that it's a very difficult situation. I think the Democrats are not doing their duty. Their duty is to be the moderating force up there. The Senate is, and in fact, they're not. They're the exact opposite. And it's got to stop. It's got to stop.
What do you think is the most important impact that we need to understand about this shutdown on the broader economy? I mean, I've been saying now for 2 weeks, we're at the choke point with travel. But what else is getting affected most severely? You've got the SNAP payments. What else?
Yeah, well, basically, you can't get a permit. You can't. So basically, you know, construction projects are starting to slow down, and the travel is really, really important because the people, you know, there's holiday travel, but there's business travel. Business travel is a really big, important part of air travel. And if 10% of business travel isn't happening, then those are deals that aren't being cut and hotel rooms that aren't being filled. And so the ripple effects and then the multiplier effects of all that are really, really large. And so I think that Secretary Bessent wisely said we're starting to see pockets of the economy that look like they might be in a recession. Now, we're not in a recession because of this, but there are pockets that are really hurting. And if we go another month or so, then who knows how bad the economy could be this quarter. And we know whose fault that will be.
Of course. Which pockets of the economy are now in recession?
You know, I would get Secretary Bessent to tell you which ones he thinks are in recession. I don't know if I want to call it recession, but I will say travel and leisure is a place that's really being heavily hit right now. And if it continues to get hit, if the air travel thing goes south for another week or two, then you could say that they would have at least a near-term downturn.
I mean, what they're trying to do is stop President Trump's agenda. One of his most important parts of the agenda is easing regulation, and that means getting a permit faster, letting work progress, move forward fast. You just said we can't even get a permit now. I mean, that puts a clamp on business from the oil sector to the banking sector and beyond.
Right. But the thing I want everybody to listen to right now from this White House is that they are not going to slow down our agenda. They are not going to upend our agenda. That we're working every day so that when the government gets open, we can, you know, basically fire hose new policies at the Senate and get everything that we can possibly think of accomplished this year if they open the government. So President Trump, they're trying to slow down President Trump's agenda, but they're not going to be able to do it. They need to give up that thought and put the American people first.
Well, we're also waiting on the Supreme Court, which is so important. So I want to get your take on this hearing, Kevin. You know, the oral arguments this week on the president's emergency tariff authority. A verdict is expected in the coming weeks. When are you expecting the verdict?
You know, I'm not a lawyer or a Supreme Court predictor, but I could say I thought that the hearing went very well because thing one is that you have to establish that it's an emergency, and I think that pretty much everybody agrees that having hundreds of thousands of people die from fentanyl and having all these towns all around the country basically put into despair by international trade. You know, Angus Deaton wrote the famous book about it. That counts as an emergency. And then as regulating trade, can you do it with a tariff? I think that there was a key moment where one of the justices said, well, you know, could they have an embargo? Well, yes, they could have an embargo. A tariff is a smaller move than an embargo. So therefore, it seems like that authority would allow for a tariff. Another way that I thought about it, Maria, is to think that they could also have a quota. And if they had quotas and then they auctioned off the quotas, that would clearly be allowed. And then that's kind of the same as a tariff. And so I think that both sides of it logically are falling our way, and we're really optimistic about the outcome.
Well, I mean, I think this is a really important point that you just made. I mean, what's the difference between a tariff and a quota? If the president has the allowance or the wiggle room to put quotas in, why wouldn't he have the allowance to put tariffs in?
Right. That's exactly right. And in fact, there's an economic benefit for tariffs that's a little bit different from quotas, because if you put a quota on, then it tends to benefit the foreign seller. If you put the tariff on, then we get the revenue. And so the tariff is a superior thing that accomplishes the same thing.
But when I spoke with President Trump about this a couple of weeks ago, he made the point that if this goes the wrong way, we're going to have to pay back money. I mean, you know, here's the president with me just 3 weeks ago. Watch this. What is your backup plan should the Supreme Court decision go against you on the tariffs and the emergency?
Well, I'll have to figure something out. I don't want to even think about it. We're doing so well to think about it. You know, if that happened, we'd have to pay back money. So if anything would happen with that, that would mean they're allowed to use tariffs and we're not. If they took away, this is national security, if they took away tariffs, then they've taken away our national security.
So, Kevin, how much money would we have to pay back? And are we paying corporations hundreds of billions of dollars back in tariff revenue already raised?
Yeah, I think that it would be probably in the range of 200 to 300 billion. Depends on how much tariff we get between now and when the ruling occurs. The one thing I want you to know, however, is that we are highly confident that this is going to work out. But Secretary Bessent's team is ready for anything that happens. That he's one of the most talented Treasury Secretaries I've ever seen, and that, of course, contingency planning is part of what this White House does at the behest of the president every day. And so whatever the world throws at us, we're going to have something. We're going to have an answer.
What are the plans for growth coming out of this? Because at this point, we know that this is having a serious impact on the economy. We're going to look at, I mean, is there a case to be made that it's not necessarily 1.5% growth versus 3% growth, but it could be negative? It actually could be a decline for the fourth quarter, given the fact that we're on day 38.
I don't think that it's likely to be negative if we can get the government open soon. But the outlook for growth going forward is just fantastic. That we've got a capital spending boom. That next time I come on your show, Maria, let me show you some charts. You know I love to do that. But there's a capital spending boom right now that's unlike anything we've ever seen. And you know that when people are building factories and buying machines, then that creates jobs. I think that because AI is increasing the productivity of every worker, there are a whole bunch of studies now talking about this, that we're looking at underlying productivity growth of around 2%. And so with capital spending growth and productivity growth, you're basically looking at an easy guesstimate of next year's growth of 4%. And so all we have to do is get Congress to settle down and let our policies start to work, and we'll be looking at the golden age that the president talks about.
Yeah. It's a good point, and that's something that Nancy Lazar has mentioned many times from Piper Sandler. The productivity and capex is so important here. But if we are talking about a weakened fourth quarter, which obviously we are, doesn't that put the fire under the Federal Reserve to move in December? I mean, Federal Reserve officials are split on the path ahead after last month's rate cut. Chairman Jay Powell signaled that the Fed may pause in December, even as some people are warning about a weakening labor report and overall market. I mean, Challenger, Gray and Christmas yesterday said that U.S. companies have announced more than 153,000 job cuts in October, and that is the highest for the month in 22 years, Kevin. So how would you assess the jobs picture, and what about the Fed?
Well, the Challenger report was one of the worst. We have got like a whole bunch of different reports, so the Challenger report was one of the worst ones we've seen. But to be sure, the labor market is a little bit softer right now, in part, I think, because of the uncertainty over the government shutdown. The bottom line going forward is that the economy will recover and we'll be doing fine if we could just get the government opened. And as far as the Fed is concerned, I was very disappointed. Again, you and I have talked about the potential risk that the Fed becomes a partisan organization. Think about it. At the previous meeting, they basically signaled that there would be 3 rate cuts. And then at this meeting, they said, well, probably not in December. And the bottom line is, what was the news between the two meetings? The news was that the shutdown created a negative shock to GDP, which should make them more likely to move. And we got inflation numbers that were better than 43 economists at Bloomberg expected, which should make them more likely to move. And instead, they said they're less likely to move, which is really a puzzle. And so I think that you're right that the weaker numbers from the shutdown are going to make it like really indefensible if they don't move. But I'm not sure that they haven't become a partisan organization that's going to be playing politics.
Well, it's a good point, given the fact that as soon as Jay Powell started, he put all these climate rules in place. And then, of course, we know that he cut rates right before a presidential election. Kevin, how would you be different as chairman of the Fed than Jay Powell is right now?
I've got the best job in the world right now, and I don't want to speculate about how I'd be different if I were at the Fed. I know the president's got a long list, as does Secretary Bessent, of really able people. I'm kind of humbled to be on that list and happy with whatever the president decides.
Well, we'll be watching that. I know the president relies on you so much for so much on the economy. Do you believe we're at a different moment in time because of what's going on in technology? I mean, do you look at the recovery and the broad macro story differently today than you would have just 5 years ago because of the impact of artificial intelligence?
Absolutely, and it's because of the productivity. And so again, the story I like to say is that if I were to cheat with a chess bot, then I'd improve my chess. And if Magnus Carlsen, the world chess champion, were to cheat, then he'd get better too, but I'd get better by a lot more. And so that basic idea is something we're seeing all over the labor market, where the lower skilled people are seeing the bigger increase of productivity and the bigger wage gains because of artificial intelligence. And so I think when you think about what AI is doing to the economy, I think it's more transformational than the computer was in the late 90s. And you'll remember that with the computer, one of the things that Robert Gordon and others were saying is that it's everywhere but in the productivity numbers. The fact that it's already in the productivity numbers, which tend to be a lagging indicator, suggests that the AI benefits might be even bigger than we know. But I think that a humble expectation about what the AI economy is going to look like is what the U.S. economy looked like in the late 1990s.
Yeah, but Kevin, I mean, obviously AI will create, efficiencies, and that will mean that it will cut jobs. And so I know that the president has talked about trade schools, we need more electricians, we need more plumbers, et cetera. But is there a broader plan out of the administration in terms of dealing with the job losses that will no doubt come as a result of AI efficiencies?
Right. Well, there's the Office of Science and Technology Policy has a whole bunch of AI experts. In fact, I'm meeting with one of them today to talk about exactly these issues. What we're seeing in the data so far, Maria, is that the way to think about what an AI, I don't know how much you use AI in your job, but the way to think about what AI is doing right now is whatever you're working on, AI, all of a sudden you've got a pretty good coach. So whether you're changing a part in your car or whatever, you got a pretty good coach. And so what it means is that if people do unfortunately find that their job over here is disrupted, it's much, much faster to go work over there because the AI is, you're going to have a really great coach getting you started right away. And so we're finding that the productivity gains are even visible in new hires. And so I think that it's what Schumpeter would call creative destruction, that it's there's going to be a lot of parts moving around, and that's going to be stressful at times. But I think in the end, we're going to have like a much richer, wealthier, and happier economy.
All right, we will leave it there. Kevin, it's great to talk with you as always. Thanks so much.
Good to talk with you always.
Kevin Hassett at the White House. Thank you, sir. We'll be right back. Stay with us.